I'm joined now by the chief executive of FICO, the owner of the credit scoring recipe most widely used by American lenders. Mark Greene joins us now. Thanks very much, Mark, for joining us. In essence, as Manus, my colleague, was telling us, this is still very much a liquidity issue. And you look at the impact on consumers.
That's right.
What is the impact right now, Mark?
First, the reason for the focus on consumers, this recession has been a bit unusual by historical standards because the consumer is the one that got us into this problem. Consumer spending in many countries accounting for 70% of GDP, quite a large percentage by usual norms. So as consumers got sick with home equity issues, with credit card delinquency problems and so on, they largely precipitated this crisis. And therefore, we think it's going to take a healthy consumer to see recovery. So what we're looking at the moment is the ability of consumers to borrow as they need to sustain their financial needs. And in the current liquidity crisis, that's quite constrained. There's very little consumer credit available in most countries these days.
What will it take then? Because as we know, central banks and governments have been flooding countries with money, specifically central banks. So why isn't the money, why isn't the credit getting through to the consumer?
Well, because I think mixed messages are being sent by central banks to the bankers. On the one hand, they're being encouraged to lend, as you say, but on the other hand, they're being encouraged to strengthen their balance sheets and tighten up lending standards. So we've seen in many countries that the amount of consumer credit available is actually down by about a third from the peak at the beginning of the recession.
So what's it going to take then to get banks to start lending properly to the consumer industry?
I think it's going to take them and consumers having more confidence in the future. And perhaps the single best indicator of when they'll start to feel more confident about this and start lending more is unemployment rates. The best indicator of consumers getting in trouble with their mortgages, with their credit cards, is the rate of unemployment. And as that starts to come down, thanks to various fiscal stimuluses, both the lenders and the consumers will start to feel better about the ability of consumers to take on additional debt.
Many are talking about, Mark, specifically in the U.S., of the potential for a jobless recovery. I mean, how worried are you about that?
And therein lies the problem. So people use the word wobbly recovery, and I think that's exactly right. I was this week in Spain, still 22% unemployment. That will likely be a jobless recovery, as you were just talking about on the show. So I think countries such as Spain and elsewhere where the employment situation remains quite challenging will have quite a while to go before consumer credit begins to liberalize.
We had Paul Krugman speak yesterday, and he said that we're in the early stages of a third depression.
Yes.
Now, you're a man that knows his economics.
Yes.
What do you think about that?
Well, I'm also a man who's smart enough to know not to comment. I'm a former Federal Reserve economist myself, so I don't get into depression talk. But look, I do think it's clear that we're steering a middle course, trying to, on the one hand, have banks shore up their balance sheets, but at the same time try to liberalize extension of credit to consumers. And I think this is going to be an issue that takes quite a period of time to work itself out. I don't subscribe to the depression theory, but neither are we looking at a sharp V-shaped recovery. We have easily 6 to 12 months to go before we achieve the peak of some of the mortgage problems in various countries, including the States, and probably another 12 months or so before the credit card crisis peaks in many countries as well. So I think it will be a tentative, wobbly recovery, heading in the right direction. I don't think we're headed for double dip, but it's a tenuous time.
Mark, thanks for joining us today. Mark Greene, the Chief Executive Officer of FICO.